Good morning, guys. It is Thursday, May 2nd, 2024. This is Bathrobe Business. I'm Georgi Oganov. I got the coffee and I got the news, and my office is kind of a mess right now, but we're in the middle of engagement plans, so there's stuff behind me I'm trying to block off, but that's another story. So I've been gone most of the week. I haven't been gone. I've just been busy with work, so I haven't really had a post. What is it, Monday, Tuesday, Wednesday? So I've got a post today, but I know I won't actually have a post for Friday tomorrow either. So it's my one post of the week. Not a great week for me as far as work goes, just have too much going on, so I had to dedicate more time to that than to this channel. So I'm going to give you kind of the news stories you probably already heard. I'm going to try to give you a different take on these than a lot of people are talking about. But let's talk about what's been going on this week. So as far as the major stories today, Google is definitely a major story because they are laying off about 200 people and they are outsourcing to India and Mexico. Now, what's interesting is they're actually only outsourcing about 50 of those positions of the 200 that they're getting rid of. This is their core employees, so these are pretty powerful strategic positions at Google. These aren't low-level positions. And there are engineers involved. It looks like the engineering positions are the ones that are going to be outsourced to India and Mexico. I think it's also very interesting, as I've talked about on this channel, that Mexico is slowly becoming a powerhouse. We've talked about the fact of Mexico becoming more and more of a place we offshore to. Even when we say we're reshoring jobs, oftentimes that means it's ending up in Mexico and not actually back within the United States borders. I've also talked about on this channel how a lot of people that advocate for work from home should be very wary of that, because if you're just a work from home position, you're pretty much an outsourced position. The employer doesn't see you as a person in the office. They don't see you as a key person. They just see you as someone that performs a task. And when you become nothing more than a task operator, when you essentially AI yourself, it's very easy to get rid of you, because then you just become a capital allocation. The employer doesn't look at you as a person, he looks at you as an expense. And I know the cynical people out there will say, well, that's how employers always look at employees. That's not true, because there's intrinsic value to employees that goes beyond just completing a task. What they contribute to in the office, the dynamic of the team, etc. But if you're just becoming a task operator and you're just performing a task with no real interaction with anybody else, you are essentially AI. And then you become a question of, well, are you going to cost me more, or is the guy in Mexico going to cost me more? Especially where Mexico is. If we need to have you come to the U.S., it's usually easier because of free trade. And if we need to go down, it's easier to see you. And if we need to move product, it's easier. And there's lots of English speaking in Mexico, and that population is growing by the day. There's lots of good tech in Mexico. There's lots of good industry in Mexico. So I think this is going to be more and more viable in the future. So Mexico is definitely a power player in the next 10 to 15 years, probably the next 50 years. But I think the major change we're going to see is going to happen in the next 10 to 15. 10 years from now, we're going to look back and say, holy crap, Mexico is a powerhouse. The next thing I do want to talk about, that's the major story of today as far as what's happening with Google. There's other obviously major stories. That's the only one I think is of import. Now, what's interesting is a lot of these layoffs with Google started happening last year. This is a minor layoff, seeing as how it's only 200 people. Major layoffs came last year. However, Google's sales revenue, one of the things that triggered layoffs in the first place was low advertising revenue. Google's advertising revenue has been improving, but their cuts are continuing. So a lot of these tech companies are becoming much more lean than they've ever been. A lot of them are making do with less employees than they ever have. Another major story is Tesla is its own story, but usually, Elon doesn't actually deviate too much from what's happening in Silicon Valley. In a lot of respects, Tesla does operate like a tech company. And Elon Musk has announced more cuts in both their Supercharger positions and even internship programs, because their internship programs are not all are, but most are usually paid. So oftentimes he's just in line, if not ahead of what's going on in the greater market. Everybody criticized him when he started major cuts at Twitter, but that was literally just a few months before all the other tech companies started their major cuts. So I think that him doing this is just another signal of how these companies are doing cost cutting and saving on, they're trying to be more efficient, saving on costs. So I think overall this is a trend that's going to continue. There was even a story today that Peloton, I don't consider that a tech company necessarily, even though they would, is laying off people. Again, I think that's its own issue because it's not a profitable company, and I don't understand how it ever was. But I think this is just another trend in the market as a lot of these tech companies are becoming more lean and efficient. Next major story I want to talk about is from yesterday. So private payrolls came out. These were ADP numbers. And these numbers were higher than anticipated. But as we know, for the last, I think, 3 months now, 4 months, every time I've reported ADP numbers to you, at the same time, they've come in under estimates from what the Labor Department reports a few days later. So the Labor Department numbers should be out tomorrow. I won't be here to report on them, but just look them up and you'll see. What I draw from this, I think the major thing I draw from this is the largest gains are once again in leisure and hospitality. Every time these numbers come out, I always look at those numbers first because everybody loves to cry recession, but leisure and hospitality is constantly increasing. I think there was only one recent labor market report where they weren't number one, but they were still very highly ranked. And that was, I think, back in February when I reported those. But once again, leisure and hospitality is leading. So 192,000 jobs were added in April, over an estimated 183,000. That's and employee pay was up 5%. Then, in addition, leisure and hospitality increased, and I shouldn't say in addition, but as a component of that, leisure and hospitality increased by 56,000 jobs. So once again, if leisure and hospitality is growing, the economy is doing fine. A good close second was construction, adding 35,000 new jobs. Honestly, I think that's always an underplayed number because so much of the construction industry is a little bit on the black market, cash transactions, using foreign labor, illegal immigrants, things like that. So this is always usually an underplayed number, but it's good to see construction that high ranking because we still are in the middle of kind of a housing issue. And then I'll kind of keep the rest of the numbers out of the picture because I don't think there's much to draw on that. I think the major draw is the fact that the economy is moving very powerfully at 56,000 new jobs added just in recreation, and employee pay, of course, being up 5%. Next story I want to talk about, obviously Tesla. Tesla is cutting jobs. But what I think is interesting, they did have a jump a couple of days ago in their stock price simply because they are being allowed to move forward with autonomous driving in China. This isn't anything new. This is the same driving capabilities we have here in the States, but it's definitely something that bumped their stock. But what interesting thing that happened in China. So BYD, the EV manufacturer in China, the powerhouse that was to take down Tesla, actually missed estimates and had a really bad quarter last month. Just a few days ago. So this is because they over discounted. So this is funny because China does tend to over discount things, and in this scenario it actually hurt them. What's interesting about this is Tesla's doing a similar strategy here in the US. They are starting to cut costs again. So if this will actually lead to a bump in sales is unclear, but that's something to watch. Next thing we'll talk about is healthcare. So, just a couple of days ago, Walmart reported that they are going to shut down their virtual care centers and physical care centers across the United States. So, a couple of years ago, Walmart launched healthcare centers built right into the store. So, you could see a dentist, a doctor, get prescriptions right there, fill them at the pharmacy. It hasn't worked. Costs are too high. Walmart can't operate it. What I like about this story is it just illustrates how complex the healthcare system is. That even a behemoth like Walmart couldn't even enter the foray. I'm in the healthcare industry myself. I can tell you it's incredibly difficult. Rising costs in wages, rising costs in materials, and your actual costs are fairly heavily regulated due to insurances. So healthcare operations are incredibly complex. It always makes me laugh when, like Mark Cuban is a big one out there right now. He's got a new pharmacy company that is not going to work because there's no way he's going to have better purchasing power than CVS, than Walmart, than any of the major players out there. But he is promising that you're going to have prescriptions at a cheaper price than what they are offering. It's not possible and it's not going to happen. It's going to shut down just like Walmart here did. Now, Walmart obviously isn't closing down their pharmacies, but as far as their physical healthcare locations, they are being shut down. Last couple of stories I'm going to talk about, just the two major ones. I'm actually going to skip one that I had on my list. Home prices are soaring again. Even these are the highest levels since February, despite the fact that mortgage rates remain high. So home prices are continuing to rise, despite the fact that interest rates stay high, and this is clearly just due to demand. At a certain point, you can't sit on the sidelines; you have to buy a house. I myself am in a similar position. I am looking to get rid of this house after. Oh, I bought this house when I was 25, so almost 12. It will be 12 years this August that I've been in this house, and I do love this house, but I do realize that it's time to move on. But home prices are rising again. Now, this is interesting because yesterday Jerome Powell had a Fed meeting where he said he is not going to be cutting interest rates yet because inflation is sticky. What's funny is there's finally more than one voice, my voice, that is saying that interest rates might actually go up. I think he's very restricted from doing that right now, but I think it's back on the table because the chatter is starting in a lot of different circles that inflation is remaining sticky, and how are you going to combat it if you don't raise interest rates? However, to the flip side of that, there was another bank failure just a couple days ago. It's been fairly quiet, but it's Republic First out of Philadelphia. A small regional bank has shut its doors. This is for the exact same reason that all the other banks had closed down, last year? I believe it was last year, SVB and the others, and Signature First. For First Signature, I can't remember. But those banks closed down because of their bond assets with low interest mortgages. This is another one of those scenarios. So this is one of the things that is restricting Jerome Powell from being able to raise interest rates, is a lot of these banks are sitting on incredibly low interest rate assets that they just can't move yet. And if they take interest rates higher, it devalues those positions, and the companies could end up going bankrupt, just like SVB did. That is true, but that I think is just a consequence of the market. To quote Drago, "If they die, they die." I think it's very necessary. We can't keep the market arrested just because banks have made bad moves and bad strategic investments. At a certain point, they have to figure out what to do with them, divest them, sell them, restructure their assets, hold more cash on hand, whatever it needs to be. But they need to restructure themselves so that they are in a position where they're not on the brink of failure if interest rates go up a quarter or half a percentage. So that's my take on it. In addition, well, I'll keep that. I'll keep that to myself. I was going to say something stupid, so I'm not going to. That's pretty much it. So those are the stories of the day, really the stories of the week. Like I said, I won't be here tomorrow, but I'll be back Monday. I hope you guys have a productive day, a productive Friday, and a productive weekend. I'll see you guys Monday morning.